Quite simple day today. If you understand tapering, this will not come unfamiliar to you. Now, some early selling here. We haven't truly identified the key algorithms there as well. So I'll just be very careful about these trades here. But this has helped us identify the green algorithm, which, as you can see, came in very handy today, especially near the break of the blue. Later, I will talk about that here. So, if you see some action at the start of the day, well, you can always use that information later. You understand the concept behind that, right? So instead of thinking, you've missed out, because at the grand scheme of things, you missed nothing. You have more information to make better trade decisions later. Right here now, we already identified the teal. Now you see the teal building quite strong liquidity here, and we've already identified the magenta then. So once you see the breakout here, right, you see the clear breakout, right, we see magenta that's holding the resistance here, and you see the teal still building liquidity. Now there is a beautiful trade here. You could take this for early candles. Understanding there is a buying precision algorithm, understanding that there is a breakout, and you see the teal building liquidity. Yes, this could be a possible trade here, because you would have the magenta to be your stop loss target here. So it's a little far because we are not truly at the base of the magenta, but still a viable trade because you see teal building liquidity. The possibilities of this not happening will be this, that we may dig a little deeper before it starts heading out, because this is also very possible. So when you understand the possible scenarios for taking a trade here, you would know where to stop and know where to re-enter if that happens. So in the event you say you take a call here, right, you get stopped at magenta, it bounces back up to teal, you take calls again, you're still fine. You understand the logic behind that. So you're always planning your trades in a series of possibilities of re-entry and of how to manage your risks here. So this could be a possible trade. It's beautiful. But otherwise, knowing that magenta is holding the resistance here, you have to understand what's your risk to reward. It's still pretty substantial, isn't it? So possible trade here if you wanted to. I didn't want to take this, not in the morning. So that's fine, because I saw some tapering here, and with the magenta, this was quite clear cut. Once we started tapering, you see the blue, and we identified the blue already, isn't it? And you see we broke out of magenta. Magenta rejected it twice even, and we started to see blue building liquidity here. Now it's the same concept again, isn't it? The concept of dual algorithms. Do you see the dual algorithms here? Now, if you have not, you need to be watching the previous episodes of the secret trading videos, because this is very common, especially in the morning, as you see it happening. Now there is one more very important element here, which was this pink. Now this helped me take my trade, because you see the rejection here of the pink, and it helped me take a zombie here. So I took a put here because I know that there is a very clear stop loss target of that pink. If the bulls wanted to take this, they need to build more liquidity. So this is a zombie trade, but yet I know that there is a possibility that this can head down because of the dual algorithms here. So you see, you have two confirmations that this may head down in order for you to protect your trade. So very simply here, if you take a short trade here, you knew there was a blue algorithm, you have to protect it by then, and you are practically safe to capture the entire move. You see the logic behind that. Understanding and being patient even is very important, right? Because I'm absolutely all right to miss this trade. If you miss this trade here, you got this. If you miss this here, you've got this. If you miss this here, you've got this. There are plenty of trades you can take it. So firstly, understand the logic behind the tapering. You see the blue tapering here. Yes, you see the possible dual algorithms that's forming, right? Understanding dual algorithms is very important. And once more, having a zombie here. Now this is important, because remember the zombie trade of something that's trending down here. If I were to short this, knowing it's a zombie, it will continue trending down. My stops will be preserved, isn't it? You understand the logic behind that. So it's the best to zombie a trade when you have an algorithm that is trending in the direction of your trade. So that's a very important concept here you have to learn. I've talked about this previous episodes as well in the training videos. You have to know that. Now, if you miss that, so be it, because it's a zombie trade. It's also quite advanced, but otherwise you see we closed the cup here. I talked about this so many times, isn't it? Let's talk about that here. Let's see. On this one. To the penny. Do you see that to the penny? On beautifully that blue and the magenta. You notice I didn't retrace back the blue. I didn't provide this bottom because there's no need for that. Let me explain. You see we closed the cup, right? The blue was still there. And all you had to do was to wait for magenta. Take a look again. Exactly as it is. Do you see and understand that? Now, very importantly, you have to understand why is that so. And a big part of that is knowing that the magenta has to soak up the buyers. It's an act of soaking up the buyers. So I'm waiting for a stronger buying algorithm. In this case, this is also a bearish control. So you see this is controlled buying. So this is actually, in fact, the bears controlling the buying. Wait for that to happen. You see, once again, we retested pink. So this would have been a great trade. I would have added more runners here if I wanted to. This would be a great place to add runners. And you had more confirmation on the breakout and retracement of magenta. Do you see how you can manage your risks very tight? Now, this doesn't have to always go down, but your risks are properly managed. That's what I'm trying to say. You see the cups closing, you're expecting a handle, right? And you see magenta failing. This is a great place to properly take a trade because you have tight stops. You know where you can protect it at blue. And you see how once we grab that, we formed another nested right shoulder here as well. So just take a look at the structure. Absolutely beautiful. Close the cup. We formed the handle and we had nested right structure here with the blue, with the precision green here. This precision green was godsend because this will help you close your runners all the way down. Remember, as I tell you, you have to be very, very, very careful with closing your runners. You have to protect as much as possible without the greed that's going to go down. Now, I wasn't diligent in charting here because if you were, this would be penny perfect pink. Let me demonstrate it to you. I'll copy it and paste it here and just take a look. It's penny perfect. So I should have just charted that pink here for a proper guide, but I wasn't at my desk at that time as well. So you would have protected your trade. But regardless, you had the green to help you manage your runners here. So this would have been a beautiful, beautiful trade. Now, if this bearish structure didn't have continuation near power hour and VWAP is just here, the chances of this retracing back to VWAP is very, very high, especially with the lack of continuation. This is also what we call a liquidity wedge. And you see how the market just wedged right to the end of the day here. Still some possible final 10 minutes trade here once you saw the teal. Now, I wouldn't be taking that trade, no chance, because you also see the blue also controlling the range here. So this is just pretty much a gamble. And knowing near end of day, you see this is, well, practically a 0.5 point move here. Near to end of day, they kept it within one strike of SPX. They are not going to pay everyone else. You see how treacherous this can be, right? So maybe a final push of volume to just expire everyone out. But essentially what you have to be prepared for is knowing that, well, 99% of the strikes are not going to be paid because only one strike price will be paid by the time you reach 350. So you cannot be trading this, not without continuation. If you caught this, you must admit it's a gamble. You must be honest with yourself. You must know you got lucky with that. If you have this as part of a runner, your strike price has to be very good, very well placed as well, and the risk is just very tremendous. So on hindsight, it always looks great. Final 10 minutes on hindsight always looks great. But you have to be better than that, with better knowledge of how we got there and whether it's a realistic trade to take as well. So once we lack continuation, if you didn't take the zombie, if you didn't protect the zombie, this trade, it's nothing to you. It means nothing to you. Because for about, well, close to an hour, we were chopping half a point. Realistically, effectively, half a point. So they are just trying to stop everyone out in the VWAP. You cannot be trading this. So once we ended that cup and handle continuation, this inverse cup and handle continuation, once we broke out of this green, this is the reason I tell you to just go enjoy your life, because the market is not going to do anything. Maybe we will gather clues. You see that pink algorithm again, gathering clues. Controlled selling. I warned you about controlled selling if we do not have continuation. So let's watch and see tomorrow. Maybe we have the cup close. Yeah, we will see that. You will have more information tomorrow in that secret training video right there. So quite a straightforward day. You see, let me just run through my trade here. I caught this trade here. If I'm not wrong, let's see again. What's my trade here? 12.28. I remember taking it from here. So this is 235. I protected it by the cup close. 13.18. Let's see, where is that? Right here. Right, this was already $5.40. So it's way more than 100% there. Way more than that. And if I'm not mistaken, this was about 630. So it's about it's not 300. It's not 3x as well yet. Right here, if I'm not wrong, I think this was back to $2, and this went up to $5, $5 to $6 again. So this particular trade here, if you took the continuation, it can easily get another 100% trade here. It's so possible, right? I think it was back to $1.50. I'm not too sure. I wasn't really checking or looking at the options chain, but you understand. You can check it out as well. All these information are available in your brokerage platform. So understand how to be looking out for options, historical data as well. It's possible. And this trade would have been at least 4 or 5x if you knew that there was a continuation. And would you take a gamble here if you had very good confirmation? Now, all trades are a gamble, but some gambles are better than others because firstly, it's intelligent, and secondly, well, you have very defined risks, so you can manage it very well. If you saw pink building liquidity here, this would have been the clear trade with magenta as well. So clear resistances to take puts, right? You will manage your risk well. You would know where to protect them, and you have taken the way down because you see that it is in that selling position. It has never broken that teal, and we even had strength in that green as well. So this would have been easily a 400 or 3 to 400% trade, 4 to 5x trade here, right? Understand that, not just the 100% trade that I took. So when you can understand how to be finding profits in the charts, planning accordingly, and that strike was quite important, right? Because my strike price was here at the low of day where the cup closed, and this was why I took that strike, because I was expecting it to get there, and if we do break out of it, it will increase exponentially. Now you have to understand how delta works, because once we get into money, it starts aggressively increase its value, because your delta will be 0.9 to 1. It will be almost 1. So every 1 point move it's 10 point $1 increase for SPX, $1 for SPY. You know the basics. So you have to understand that, and taking something that's a little bit out of the money helps me to manage my trade, because what's the maximum that I can lose? You understand what I mean? Because it is probably at 0.2 delta, 0.2 to 0.3 delta. So when you understand that, you understand how to be managing your stops. And this is with penny perfect algorithms and with small delta. So every 1 point, you actually have a smaller amount of stop loss, so you're increasing your risk to rewards even more. So clever choice of strikes is still very important. It is extremely important. So while I'm explaining that this is, well, a 100% trade for me, it's technically so much more than 100%, because I've always explained this to you. I have penny perfect algorithms. I'm not using just the contract value of $2.35 as my risks. And secondly, because it's penny perfect, right? Even if I'm using, say, 0.2 points as my stop, technically speaking, I'm using 0.2 to 0.3 delta of 0.2 points. So you understand what I'm trying to say. It's very, very tight risks and very strong rewards, especially if I broke out of this. Right? If we do break out of this with the green algorithm, goes in the money, plenty of way down, isn't it? Because of the gap here. This would have been absolutely amazing. So it's a good risk to reward, especially when I've protected all my runners. So you understand how to be preparing a trade, managing a risk to rewards, and you can do that better when you trade less. You notice if you put in more quality analysis and then setting up that 1 or 2 trades in the day, you're able to properly plan your risk to reward so much better. So understanding that fact is important. It will help you in your trading much better. Straightforward. Once again, starting of the day, we had some selling action. This is great because the morning selling did reveal this selling precision algorithm. Now this will come in handy, right? Whenever a precision algorithm appears, this will help you because this is the algorithm that you want for breakouts. Now, we then identified the magenta and the orange. Didn't seem so useful right there at the start, especially when we were just selling down this very beautiful green precision algorithm. I also managed to identify the teal. Now, this was when I mentioned something here at the start of the day about missing my trade with the teal. Right there. Right, wanted to short that teal but missed it. Right, you have to understand my thought process here. Quite straightforward. It was a retracement of magenta. Right, I identified the magenta. We had the breakout from magenta. You see this large candle here. Now, this is an intent of the bears wanting to push down. Right, you see it pushing down in that green. And then it bounced back up in that orange. And this was when it is a good entry here. Let me zoom it in for you so you can see it more clearly. Right there. Right, you see magenta. We identified it right then. And also the teal. And you see how penny perfect it is. Now, there are several mechanisms behind this. Firstly, large green candles. So if you fill your put in the green candle, you will have some slippage that you can take advantage of. So in this case, if I take a put here, I can allow it to, well, survive at least till magenta, even if it breaks out of the teal. And, well, this was obviously some luck involved that it turned out to be a large red candle next. And by then you would have already protected. You must have already protected. I looked large here because I zoomed it in, but this is only a 0.8 point candle. Still good enough. You still can protect your trade then. And be able to assess with your protected runners on the selling continuation structure there. Now, that aside, apart from having good fills and understanding the early algorithms and taking advantage of them being penny perfect, right? Because this teal from support turn resistance, isn't it? And it's part of the selling structure together with the magenta that was building liquidity on that certain breakout there. You see how magenta started rebuilding more liquidity here as well, right? We started selling, you see magenta starting building liquidity. So it was quite straightforward on this downward selling continuation here, right? You saw that happening, and subsequently you saw how magenta can still be in charge. Once again, do you see? Dual algorithms. Self-explanatory. I've been talking about this for so long, and if you see it, once you see it, you cannot unsee it. And once again, this one within the confines of the pink, which is still resistance. Now, if you're trying to take the breakout of that pink, you cannot be taking calls when pink is still resistance. You must always remember that, and you see it happening right there. It turns, it's still resistance. You see the dual algorithms at play. So some very beautiful trades right here. Now, I could have taken this as a zombie. It's absolutely possible, right? Once we started coming down here, right? This was also when we identified the pink right here. Now, this is important, right? I want to talk a little bit about that. So understanding the structure for magenta now, and I'm going to teach you a new technique right here. Pay attention. I talked about this here. I told you to pay close attention about this particular diagram here. Yeah, I want you to remember this. Now, at this point here, at 10:33, right, I was talking about this teal as a possible trajectory down here to the 5-day moving average. Now, you notice some things about my trade here, right? I had a 100% trade taking from the break of that magenta here, right? Let's take a look at my trade first. Let's see, where is it? Yeah, right. So 1122. 1122. I remember it was off the pink algorithm. I took it off the pink exactly as it is right here. Now, once again, understanding the pink algorithm, understanding the magenta. You see, it's penny perfect. Look at my risk. I can manage my risks very well here, and it's a pity we were just selling in that teal. Well, not exactly, because if you were to extrapolate it, we were selling in that green as well. I took profits near to the bottom of the pink. Now, this is important because we identify the pink support, and this was when I took my profits, and this is 100% trade. Now, if you notice, my strike for SPX was at the 5-day moving average, 65.85, right? So 65.85, that's 5-day moving average for the SPX. About that, right? Now, understanding this diagram here, it's important because I wanted to know the trajectory of that selling algorithm. If it's selling, I want to know how strong is it selling and until when can it sell. So understanding if it's still selling in teal, I can get to 5-day moving average realistically before midday. So if this price, it's at 1/3, was it 115? I bought it at 115, I think. If it's 115, it's a very good price. It's a bargain because my stops are probably about 50 cents to $1 per contract here. So it's better than taking a dollar spread. And I always talk about dollar debit spread, if you remember. It's better than taking. I'll talk about that another day when I do open one. So if you understand this, understanding that the trajectory is very important. Now, when does the trajectory stop working? When we are no longer selling in teal. And this was when we started selling in the pink. And you have to take profits here then. Because once we stop selling in the teal, I cannot get to the 5-day moving average anymore. My contracts are going to be worthless and eroded throughout the day, as you can visibly see. So by then, if we are still selling in pink, you have to start repositioning your strikes, especially if they are severely out of the money. Because if you were to extrapolate like this, I'm only going to get to my strike price at 7 p.m. Way past market close. You would have expired worthless then. So when you understand this, you'll be very careful to select your strikes. So in this case, why did I select 5-day moving average? Because that will give you the strongest returns. The only way you can get 100% trade here is if you get the 5-day moving average. Maybe, I think maybe a little, maybe one strike or two strike above may get you there. Not too sure, but ideally, obviously, I was also hoping it can break out of that pink, but you have to protect its structure demands. You can always reopen it later, knowing that the pink is there, right? So I explain how you can reopen a trade and see if it continues the trajectory down here. So understanding this very easy technique, I will help you greatly. And now you see the market has closed the cup, right? I talked about cups closing. You see the cups is closed off the pink. And just take a look. Just take a look at this. It's just so beautiful, right? You trade a structure demands. You do not have any sort of bias. You can be finding profits in the charts even. Now remember that bounce here that we had, that green algorithm here. Now this may come in handy later, isn't it? We'll see. We'll see if it starts to buy up in that green algorithm that we determined right at morning. But otherwise, this orange is still absolutely beautiful, isn't it? So just see for yourself and manage your risks accordingly. And when you understand the algorithms like this, you see that magenta, even though we were worried about it for being a bear flag right in the morning, right? I want to show you again. In the morning, we were worried about that being a bear flag, and rightly so, because we were in the tight range here, and this does turn out to be a bear flag. So in the morning, when there's a tight range, magenta appears to be possible for a bear flag. But right now, take a look at magenta. It can even be a buying algorithm for the bulls. So understanding your risk to reward using the algorithms is very important. When you can understand that, you will not be too afraid of taking trades because you understand where your risks is, where your rewards are. So in this case, we're still buying in magenta. It still can make you good money, even though it's in the orange as well. While previously, this magenta was a nasty bear flag. So you see, understanding your risks and rewards based on the algorithms is quite important. You cannot be too hard and fast about defining a certain algorithm as bearish or bullish, because the truth is, the magenta, while can be a bearish control, it is after all a buying algorithm. You notice that it's a buying algorithm, it's trending up. So you have to learn to understand how to be exploiting your risk to rewards using the algorithms like that. Let's explain this trade here. Pink algorithm was quite important, right? You have to understand having these algorithms just help you in managing your risks right there. So this particular trade here, right, it comprises of two sets of liquidity. The first, obviously, is understanding that, we have retested this pink. You've seen the pink rebuild liquidity on the way up, right? So knowing this may form an inverse handle like that. So you have to be waiting for a zombie trade. Now, this is a great zombie trade, as I always tell you, because it's trending down, but it's nearing the end of day. So there is certain risk to this. And more importantly, it's not just that, but also understanding that you see magenta and very tight dual algorithms here in the blue. Now, if I zoom it in, you will be able to see it clearly for yourself. Right, magenta, and there is some dual algorithms here, very tight here with the pink. right? Forming that. So you see the break of the pink here. Very beautiful trade. We took a trade off the magenta. You can use your magenta and the pink to manage your risks. Now the idea behind this is that the bulls want this because the bulls want to create a head for the inverse head and shoulder. And the bears want this. The bears want this blue algorithm because it's, well, already in the blue. So the bears want this. This is also known as your zone of mutual interest. So taking a trade here, right? Your strike is very important. I took a strike price that's here. Right, let's see what's my strike. 66.10. So 66.10 is here on the SPX because that's where the liquidity is. You don't take something that's out here, right? You're not going to make money. Even if you do, it's going to be a struggle. Most of the time, you are not going to make money. And once it started selling in the green precision, this became very easy. Protect it by 100% so your runners are free and close the rest once it starts breaking out of the precision algorithm here. Right? You don't want to stay out of the precision, right? Because you start to deteriorate very quickly, especially if you're out of the money. In this case, I'm still in the money, isn't it? But still better not. It's good to just close it if it's out of the precision. I mean, I closed it at $5 from 150. It's more than a 3x, 3.5x trade. It's more than enough money. So understand this trade here is quite straightforward, right? You can still always find profits in the charts, even if you see that we are literally still wedging. Yeah. So newer traders, you will learn how to be taking more intricate trades, tighter trades based on managing your risks. But generally speaking, if you're newer, I would want you to take more larger trades instead of tight trades like that. But you will get better because when you take larger trades, you can scale down, train how to be taking runners. As you get better, you can take very tight trades like that. Why not manage your risks even better from there? See, very importantly, I mean, just take a look at the entire day. Absolutely no need to trade this, isn't it? No, it makes sense to you. You have to be more exposed to FOMC days to realize that this is just insignificant. You're taking too much risks for moves that may not exist, especially when IV, the implied volatility will be extremely, extremely high. Now, I explained this in the start of the day where I talked about, let's see, right there. So please read this. Right, you have to understand that I was explaining to you how it just doesn't make sense for you to be trading 0 day to expiry with such high IV and very, very limited moves right here. So please do read them. It's quite important you understand this. Now, as we approach, now there are news candles, right? So 2 p.m. was a news candle. This may be a little hard to catch. So you realize that I didn't catch the trade prior to the news. So yes, we saw some structure here. And if I were to remove all the other candles here, this inverse head and shoulder pattern may look much clearer, isn't it? Right, it was much clearer then, although that it's a little tight. So when you see it like that, this is clear. So I miss this because this is a news candle. That's absolutely fine. You can miss this too, but still you see how my entry came in. Now once we had that red candle wicked off that teal, that was my entry right there, isn't it? Now, if you want it to be more, more strict with this, you can chart, the precision algorithm here. And once we wicked off that teal, you can draw another precision algorithm to guide your risks here. So that was my first trade here from the day. And you realize you can miss the news candle. That's absolutely fine too. There was a 50% trade here. Nothing spectacular, but it's quite an easy trade to manage here because of the increasing volume. And there is news that helped with the move about the extra rate cut for the year. So quite straightforward here. This was a quite relatively easy trade. Now thereafter, I showed you that there is some liquidity of magenta here, isn't it? And this was important because this is why I always tell you, you have to be preparing your trades everywhere possible. You always have to be prepared. Even in the most unlikely of situations, you have to be prepared because that's how you find profits in the charts. It's not about searching for a bias. It's about finding profits. And you see it in action right here because we identified how the 5-day moving average is just building liquidity of this orange and magenta liquidity here. Now, if you manage to catch this first move here, because there is this precision algorithm. So if you were taking a zombie, this would have been a beautiful zombie trade as well, right? You caught all the way down. This was my other 100% trade, right? You can check it out right here. I think it's this one, right? So understanding that there is a precision algorithm that started forming, this was a possible zombie because we closed the cup. I talked about closing the cup, and let me show you the cup here, right? We closed the cup here. You saw it, right? I talked about that as well. One of the analysis here. I can't remember where. Yeah, right here, right? So we closed the cup. There was a possible zombie. I saw magenta liquidity here. The Qs are starting to get weak, and I talked about how the Qs rejected the 5-day moving average, and there is a green precision algorithm. So many conditions for this trade to take this trade right here, right? Protected by then, very well protected, and you see that the market required to form a nested right shoulder, and you see the nested right shoulder was once again in that green precision. You saw the 5-day forming that left and right shoulder. I'm going to remove all the annotations. I want you to see it for yourself. Right? 5-day. Yeah. Left and right shoulder. Absolutely beautiful. And off that magenta. And more importantly, I talked about this orange. And you see how beautifully it started grabbing the liquidity on the way down in that green. Absolutely beautiful trade. You catch the entire move. All because of the green precision algorithm. Now on FOMC days or high volume catalyst days, these are godsend, right? You have strong precision algorithms that truly travels 5 points in the chart. This is just absolutely beautiful. So you have to learn to keep your runners and manage them according to the precision algorithms. It may not be easy because you see some candles here. Now, some inside candles here, they are 1 point large. Absolutely difficult to manage your trade. So you have to learn to protect it aggressively first. So you are in a good position to endure it through the precision algorithms. And you see, if there is systematic selling, it adheres and respects the precision algorithms quite well. Now, there is a context here. And you notice once it breaks out of that, you have to protect your trade. I talked about this here. It was from last week's, right? Talked about this here, right? Remember secret trading video last week? I talked about this in last week's trading video. You cannot have some sort of bias that it's going to just keep going down. Sure, there are plenty of levels here. But you see, once it's out of the precision, once it's at the bottom of the precision, you take profits. That's what you need to do, because you see when it starts bouncing up, you're going to lose all your profits here, especially if you shorted this. So understanding this, right, you don't have to take calls yet, as I will show you later. But if you miss the puts, you wanted to take calls, this would be a zombie trade for you. It's not quite an easy trade to take. This one is not quite easy. I wouldn't have taken this, not in 100 years, especially when I have not identified my green buying. So I didn't chart this, right? Too much action back then. But until you charted this, you cannot be sure of that buying. But it is strong buying, you can tell that. So if you caught a zombie trade all the way up, that's still a great trade. But you notice my trade here would be understanding the this green algorithm here, and as well as the teal, right? I want you to see, if I were to zoom this out, you will see it for yourself, right? This is the liquidity here. It's beautiful inverse head and shoulder pattern. But there's a microstructure here from the right shoulder, which made it quite easy for me to take the trade. Now, my entry was at this teal algorithm here, and you see quite clearly that beautiful inverse head and shoulder pattern here as well of that 5-day moving average here. So there are several steps you have to take. First thing is context. You have to understand the context here. Now in this case, we have two sorts of context. First will be the structural context, and one of which will be understanding, the cup close, right? So there is always a possibility of that handle here. And I would take a look at a 30-minute chart. I talked about how the 5 days is very important. If it reclaims, you have to pay close attention to that. And our first drop was actually from this blue rhythm of that bearish liquidity. So that's the first drop here, especially when 5-day turned into some sort of resistance. So that's known as your structural context. And the second context will be, in that case, Powell's announcement. So I talked about that as well. You have to understand. I'll quickly explain, right? This went up because we had 3 rate cuts for the rest of the year. And this was up from 2 rate cuts that was provisioned prior to today's meeting. But we started selling, and I talked about this even before the Q&A. So understanding and trying to, so this is why you have to prepare, right? You have to prepare, read my brief, so this becomes natural to you. I talked about this, right? Because the rate cuts have to come with a reason. And the reason was that Powell or the FOMC was worried about the labor market. So there is some recessionary fears, and this is why they're selling here. So understand this, right? This is important. This appeared even before the Q&A, right? And we were prepared structurally and, in terms of the news, we understand how to be dissecting it. And then lastly, right, this went back up because, obviously the fears were quite unfounded. It's not as bad, but we don't know that yet. This can still dump. Give it a few days, let the market digest the news. So you just have to be more mindful here, right? But we understand structurally this could happen. So there is a contextual structure, right? And contextual news. Now, once we have the context, we look out for structure. In this case, we have the 1-minute microstructure. We understand the teal that's still building. 5-day moving average, inverse head and shoulder pattern. And this microstructure, you can take your entry as well. And lastly, is continuation. So context, structure, and continuation, right? Very important steps you have to undertake. So in this case, the continuation, I will just use this head and shoulder pattern as an example because that's the trade I took. And if you were to be waiting out, right? So teal algorithm here, building liquidity, waiting for that inverse head and shoulder pattern. There is this green, so it's quite beautiful on the breakout. This is continuation, right? And we lack the continuation structure. Although the market started rebuilding more liquidity, isn't it? So you see the market building liquidity. This is bullish liquidity. This is bullish control. And so I took a trade right here. I remember this was my final 10 minutes trade. Now this was just for vanity. I took 2 contracts here. It's nothing great, right? So you have to understand this now. Just take a look. My trade was 30 seconds long. Understand this. 30 seconds. I want to show you that. So you cannot be greedy. Once you hit your target, you just take your money, right? So understanding, firstly, once again, context, structural context here. I know that this is building liquidity because this is controlled selling, is bullish control. And I saw some microstructure here. I saw that 5-day was reclaimed. You see, we started trading below 5-day, 2 small wicks, but they are green candles. And this particular candle, my entry, we started trading slightly above the 5-day. This was when I entered. It was a good price because I took it on the red. And once it headed up, I got my 100%. I got out of there. Now, I don't think I would have, the responsibility or the guts to be trading 100 contracts here. Probably not in the final 5 minutes. So this is purely vanity, but I just want to show you it's possible. For some of us, 2 contracts here, well, it's a few $100s. It's a lot of money still. Practically speaking, I would have taken 10 to 20, but I was done for the day. If I took 10 or 20, it doesn't cost much. $1,000, $2,000 for me. I still could just double it. It's just good R&R, right? So you have to understand the microstructure, the context, right? And if this stopped out, it's only $1.25 per contract. It's not a big deal. So have you had some profits? This sort of, late play lottos are quite valuable. You can always be extracting profits here. Much better, isn't it? Just one candle. Just take a look. One candle, I can get my 100% trade. Comparing to, let's say, you're struggling in this job here. I talked about this because by then, at this point, the strikes are so much more, reasonably priced. Because at this point here, at about 3 p.m., I explained here. What happened was that something that was about 2 points out of the money still cost about $7. It's just ridiculous. And for here, I am within the strike, and it just costs $1.25. So I can double my money here with just one small candle here, just one small candle. But if we were here and there were no continuation, you would get trapped in the liquidity wedge. And you see how the market, in a way, was trying to wedge here before this small breakout, and we went back down. So if you didn't take your profits in that green precision here, right, your contract will go worthless in a jiffy, in a second. Before you know it, it will go completely worthless if you do not extract your profits once it breaks out from the precision algorithm. So you have to remember that. So understanding your IV, understanding the strike price. So you always have to just take a look at the options chain, take a look at the charts, understand the realistic possibility of you getting in the money and knowing the break-even price when you get in the money. So I talked about this in yesterday's video, so watch Tuesday, because I talked about understanding the trajectory using the algorithms as a plan. So thank you very much. I'll see you later. A quite straightforward day too. All right, because right at the start here, we identified the magenta once again. So we had very clear understanding how the bears will want us to head down. Right, so if you don't see magenta building liquidity, chances are, especially with 5 days so near, it's not heading fully down. So I talked about this, right? You can afford to wait for 5-day retest. If it never happened, it's fine, absolutely fine. You don't have to be chasing the shorts here. But instead, you're focusing on understanding how you can be catching the way up as a zombie or even as a reversal. And this came as the teal algorithm here. Now, cup close, and you saw blue building liquidity here as well. Now, I personally would not have caught the trade here, right? Maybe I would have taken a zombie here or even here, understanding the teal has bounced up from that orange here. But this is why you don't see me taking a trade here. I can afford to wait, right? So because there are several other places to catch a trade. Now, a big part of that would be understanding the starter position here. Now, this is known as tapering. Yeah, quite early tapering here. So we started buying in that blue, and then the buying weakened in that orange, but you don't see what brought us up here. So teal brought us up, but you don't see teal building liquidity, right? You don't, because it started continuing heading up here, only up to here. Then you see the teal starting to form. Now, when that happens, you know that there is tapering. You saw magenta in control here, right? So you wait for your trade to short this here. Beautiful liquidity, and we started having selling here. So this is important. Look out for your volume profile. You see that the volume has started increasing, and a selling precision algorithm has started showing. Now, when that happens, take the trade down, right? This is a good zombie trade. You could take a zombie, and we had the teal, so you could have understood where that trade protection must happen. You must protect your trade before a key support, in this case, the teal algorithm right there. Now, after that happened, you have to wait for continuation structure, and you see that while we are starting to build more liquidity in the teal, this is important, right? Because you already charted the teal here, and you saw that as it was trying to build liquidity to go the way up, it didn't retest or break it, right? And there wasn't clear liquidity. You don't see very clear liquidity here for it to grab. So how do you do that, right? If I were to draw a head and shoulder pattern, tell me where's the liquidity for the shoulder? So it's a little bit higher up, right? You don't see that here. So in cases like that, I'd rather wait for cups to form. Now, understanding that, you know that there is a teal, it may need to build more liquidity, and you saw the magenta, see the magenta, right? It's still being in control, and the orange. So once again, dual algorithms right there, right? You saw magenta in control here, right? If we were to chart one more magenta here, you would see that happening. And then there is this teal as a zombie. So this was where I caught my shorts here. I shorted here if I'm not mistaken. Let me just check it here. Yep. I shorted here from that liquidity wedge. And this turned out to be my 100% trade. One very simple trade here. It took me less than 15 minutes in the precision algorithm in blue to get my 100% trade. Or because you understood that magenta was still in control and this could still be a zombie, beautiful one, off a very tight stop at that teal and on the break of magenta gave me my confirmation, and this blue helped me to guide my runners all the way down. 100%, just like that. So understand how to be looking out for zombies in this case. So you see, you can be looking out for trades in many ways, up and down. If you understand how the charts may be building liquidity and how they may be moving that way. Now, this, however, remember, I mentioned about the liquidity earlier. Now, do you see this is so much more beautiful liquidity to grab instead of this? So market built more liquidity here because you see it's, well, more concentrated between the teal. And we started bouncing off once again. No reason to further short this because magenta wasn't even retested here, right? If this wanted to head down, this would be ideal. This would be beautiful. It's beautiful liquidity here, right? This is a perfect level. However, you don't see the blue starting to continue selling, right? So when that doesn't happen, so this blue precision is very important, right? If you do see that we broke out of the orange and re-grabbed this magenta and blue started showing here, this would have been beautiful short, but it didn't happen. So don't be hope trading. You understand that. Instead, we started bouncing up and we grabbed the liquidity on the way up here. Personally speaking, I didn't trade this because take a look, it's just not ideal. Small candles, very weak breakout. I wouldn't have traded this, but if you did trade this, right, if you caught it at the bottom here, or you caught it at, well, there is still a beautiful structure here, isn't it? Right, it's still retraced back to teal, so there was a possibility of a trade, especially if you protected it early. It took a good strike here. You could have still made some profits on this move. Certainly you may. But it went nowhere, and for the rest of the day, right, it completely went nowhere. So understand, middle of the range, right? And if you were to chart that, you would have see that it truly went nowhere. But remember, you are gathering clues for the next day instead, and I talked about that. If you were to be charting this, right, and this is absolutely beautiful, isn't it? Because this algorithm turned out to be the star for Friday, right? So understanding this, gathering clues instead of forcing trades, you're ready for tomorrow. And that was where, right, we identified this particle trade, understanding the context right here. Right, so if you understood how to be looking out for clues instead of forcing trades, you would have caught a beautiful trade on Friday. Absolutely beautiful. Friday, started with some early aggressive selling right here. And this was where we identified the teal algorithm. This will come in handy later, because this will turn out to be that strong selling continuation structure right here, but not strongest in the green. So you see there's no structure to be shorting right here until only until we identify the magenta. Now, identifying the magenta here, this was important because we already identified this before this candle formed. And you see how it started grabbing more liquidity, killing off the people who started shorting this just because, right, you saw some red candles here. This was not ideal because magenta was still there. So for those that didn't identify the magenta, you would have got caught here. And this is why I mean, do not take puts at supports. And secondly, it's very crucial you identify the magenta early. This was also why I mentioned about the magenta being clutch right here, right? We identified it way before these candles even happened. So understanding the magenta was really, really important, right? I think I identified it even before that over here. You shouldn't be shorting here already. Because firstly, right, we saw strong selling. So this was strong even without charting the green algorithm. You would be able to tell that the selling has slowed down to that teal. So until you see that a bearish control has started building more liquidity, you cannot be shorting this here. And so this would have created a beautiful zombie trade of that magenta, right? If you were looking out for an early trade, catch a trade here, you may get lucky because this will be the strongest buying precision algorithm that you have yet identified. You identified it along the way. So some of you caught the zombie trade here. Great. But now you get early profits to aid you in your trades later in the day, or just call it a day. Why not? Right. So understanding the zombie here instead of shorting this was very important because we've already identified the magenta, which you will see came in very handy later. So magenta, you see it magenta here as well, right? And also we identified the pink, right? You remember this, right? So we identified the pink, and that will come in very handy too because I talked about that over here, right? Understanding the pink to build liquidity. Likewise, we identified the pink really, really early. So the market was really kind today to us, right? And also the cup close, I will talk about that later too. This is a continuation from yesterday here, right? This was from yesterday. Now, if I zoomed it out, you will see it so much clearly, right? About this beautiful structure here. Now, this was what I was talking about, right? The market was building liquidity already. You understand this, right? I talked about this, right? We actually retested the 5-day moving average pre-market, right? Take a look. That's 5-day right there. And we grabbed the liquidity on the way up. So exactly as I talked about here, isn't it? So understanding this context that I was talking about will give rise to this pink here in the 1-minute chart, translating the structure from the 30-minute to the 1-minute. So you know what you're looking out for and preparing for. That will come in very handy. But that pink algorithm aside, right? Look out for the dual algorithms here. Now remember the magenta, I talked about that. And you see magenta again, this time with more confirmation here. Now, once again, dual algorithms with the orange and the magenta, and this one beautifully. Couple of things here. This is the most beautiful trade I think I've seen this week, but it's unfortunate I wasn't around at my desk to take this, but you see for yourself. It is well, kind of like a zombie guided by your pink, but if you were to transpose it slightly lower, you see that happening. You see the magenta was completely in control, forming that head and shoulder pattern several times as well, right? Several nested structure here, the rejection of orange and the magenta, so giving you the dual algorithm setup, and lastly a very clear precision algorithm in that green to retest the 5-day moving average. Now remember, how many times have I told you that the highest print is considered a retest of the 5-day moving average? It is, because that's where people place their orders, right? So you have to understand that this is why having a dynamic 5-day moving average is really important. Because if this were to be a flat line, it will probably be here. You don't get the full picture, right? So this is important, and this is a beautiful trade. Now, in terms of structure, this will be absolutely beautiful. And if you were to take a trade here, right, firstly, a good trade here will be, well, if you were to transpose this pink algorithm slightly lower, now this will be beautiful, right? If you were charting diligently, this will be beautiful. Obviously, the magenta retrace here as well. You see the magenta has always been in control. So this was beautiful right there. Setting your stops near to where the pink algorithm and the magenta will be. Otherwise, wait for retrace. You saw the retracement here, and adhering to that green algorithm. Now, before this particular green line, the green was about here, and you see a beautiful retrace, right? The green was only pushed out once this candle started forming, right? And you see it adhered beautifully. So technically speaking, there was another green algorithm here that you could have caught the retracement. And let me just zoom that in on that retracement candle. And let me just shift it in slightly here. Yeah, so you saw the retracement candle right here of the magenta. Still a beautiful trade. And at that time, you would have probably the green over here. Right, still would have caught that red candle very beautifully of that magenta. So yes, absolutely beautiful trade over there. Now you caught that, and 5-day moving average again. You waited for the dual algorithms, isn't it? And you see it forming again. Absolutely beautiful. Now once again, if I were to extrapolate this particular pink algorithm down, you see how beautiful it is. Right? Just take a look. See how beautiful it is. Right, and this will help the next trade as well if you set your stops, right, clearly like that. Now, it was here that I took a put here, and it didn't go down in that green, so be it, right? You don't if it's not in green, you don't want it, especially with such a strong support zone. Yeah. So you see the fact that I didn't pursue the put helped me in catching the calls later. So understand your risk to rewards. You don't always miss out. And you see it started selling in that teal instead. So you still could have managed your trades with that teal. But this particle candle, now this one, I want to talk about that. Right? Yeah, like that. I want to talk about this one because I mentioned this here. Let's see. Right here. Now, understanding is... No, not this one. I'm sorry. Where was it? This one. Right, this is important. Right, you have to understand the context of how to look out for this. Now, I was away as well at this time. Right, once the green didn't push down, I could afford to wait for a 5-day retest and to see if magenta started building more liquidity then. So this one, particular candle here. Now, this bounced off the 5-day beautifully. So, take a look here. Green candle, bounced off the 5-day very, very aggressively, but head back down. Now, you have to understand this because it grabbed all the liquidity from here and it continued its way down. But instead of selling in the green, which it should, right, for a while, if you didn't have the teal right there, you wouldn't be able to see that it is truly not the strongest selling continuation structure. So having this teal here is really important. And once it started bouncing back up, this is a very clear sign that there is no continuation. Given so much liquidity that's hunted here. Now, this is a stop hunt, right? They're trying to hunt. It's trying to soak up the buyers so that they can continue the way down. But if your way down is not strong enough, in the strongest selling continuation structure, you know it's not going further down. So this is an important logic, isn't it? It's a logic. It's an if and else logic here, right? If they have taken so much liquidity by bouncing up to stop everyone before heading down again, so this is known as a stop hunt, but in its way down, it didn't go down in the strongest, right? It didn't have the strength to continue. Instead, it started tapering in that teal. You know that the selling will not sustain. So understanding that, especially in looking out for stop hunts like that. So that's what I'm trying to mean here. You have a stop hunt, but yet you still lack of continuation. So you know that's going to be a possible reversal, right? So understand that, yeah, and understand what this green candles mean. So you have to learn to interpret it, learn to explain it. And when you can explain it, and for newer traders, it's fine to explain it on hindsight, because if you can at least explain it on hindsight, that is the first step before you can explain it during trading hours, right? And these thought processes must come through your mind in order for you to make trading decisions. And so when that happens, you know there's a lack of selling continuation. You get ready for the reversal. And with teal, right? And you see 5-day. Now, I wanted to catch my trade here, but I wasn't ready. I wasn't back yet because I saw 5-day forming a very beautiful. Now, firstly, we broke out from the teal, right? So you see, instead of selling after the stop hunt, not only did we not sell in the strongest, we didn't even sell in the strongest teal. We broke out of teal perfectly at the 5-day moving average. And you saw that head and shoulder forming right here. Do you see that head and shoulder forming with that 5-day moving average? And we had orange buying algorithm right here. So in my mind, I wasn't back at my desk. I saw this trade already here. 5-day teal algorithm. Now, such a beautiful trade, isn't it? Because you are able to base your stops off the 5-day firstly and off that orange algorithm. Now, I would have taken calls here. I would have, but I was late for this. What time did I come back to? What time did I put in my trade here? 11:46. Right, so much later here at this pink. So I saw that. I think I was in the toilet when I saw that. And you have to wait for at least the pink, and you saw the pink starting to build liquidity here, and I still saw orange in control. So I knew there was a chance that I could take a trade and just ride the way up, right? So partly I was lucky because the orange algorithm led the way all the way to the top for me to get my 100% trade, right? So my 100% trade was 12:04 around here, and I called it a day, right? I reached my target for the day with that 100% trade here, and it went to, I don't know, $12. Maybe. But it doesn't matter, you have to learn to trade according to your target and go, well, in a sense, set alerts and go enjoy your life. I cannot be catching every candle. You get your trade, you're done for the day. And people can do that only because they know they have the skill to do this every single day. So do you have the skill to do this every single day? You can decide for yourself. So this turned out to be very beautiful inverse. And then show the pattern from the teal 5-day, grabbing the liquidity here with a clear precision algorithm as well. Absolutely beautiful. This just absolutely beautiful. We had the context from this as well because you also saw that 30-minute chart here, right? We talked about this and also the break of that orange. And I talked about that pre-market structure as well from here, right? You remember this. I talked about that as well. So understanding all these very key structure from the context. Once again, I will remember the last lesson, right? You have to look out for context and then your structure and then your continuation, right? So do we have continuation here? Well, somewhat, because we identified the blue, so there was no need to short this. If you wanted a zombie, you had one here. All right, this was good enough. So don't try to push your luck. This was a good enough zombie. Right, sometimes you go all the way down before going back up yet. Yeah, sometimes it happens, right? But generally speaking, you have to protect the zombies quite aggressively. Because in this case, you saw that pink was starting to build liquidity and the teal as well. Right, now, this one particular, a little early. Now, in an ideal situation, what will happen will be you get choppier and we sell lower before we start grabbing this liquidity here. Now, it's the same place you grab liquidity, isn't it? But in this case, it's a clear structure for you to take a call. So this, whatever I just drew here, and whatever that happened here, it's the same way of grabbing the liquidity. But one is when the market is kinder, because it gives us a clearer inverse head and shoulder pattern. And the second way is when the pink starting to build more liquidity like that. How do you trade this? Now, firstly, if you caught the trade here, this is generally good enough, right? Especially on a Friday afternoon. And once you see that it didn't sustain, now this is when I know that the structure is not deep enough. Because truth be told, this is not a deep enough structure. Take a look at the pink previously. The pink took about 3 hours, right? About 2.5 hours before it started building liquidity. And suddenly, this pink, without increasing volume, is going to take only 1 hour. Nah, it's not going to happen. So you have to understand that once this broke out here at about 12:30, right? Half an hour, probably less than that since we retested. In less than half an hour, you cannot expect pink to build enough liquidity to push this up when it built 3 hours prior. So when you understand this logic, you know how to define this as being too early. So once this came out here, what I would do if I was still around, right? I left after getting my 100% trade here. But if I was still around, I would chart the pink again like that. Now, much different now, isn't it? If you were to be taking a trade here, right, instead of catching calls on the way down in that pink algorithm, which will stop you out anyway, you chart that pink. You saw the pink still in control. Yeah, you knew that the bulls are still in control. And once we broke out here, would you have taken the trade here instead? Yes, and you would have caught a trade here. Now let me zoom that in and see how you would have caught that trade. So pink algorithm, you see, charting diligently is very important, especially if you're still actively trading. You see the pink building liquidity here. You knew you're waiting for a cup and handle. That already materialized, right? So this is actually your nested right shoulder. Now, take a look at the nested right shoulder. Again, let me just build it for you. You see the teal here, right? So this was the first head and shoulder pattern. And you see it starting to build a nested right here. So you have caught your trade here on the breakout, or you catch a call here on the way down here. Absolutely beautiful, right? If you manage this. Now, how can you manage this better? And that's where the blue algorithm come in, right? If I were to chart the blue, let me just do it for example's sake. Now, take a look there. Now, take a look for yourself now. Isn't it easier now to chart with the blue? Would you have caught your calls here? Knowing it's a nested right shoulder, there may be a chance you get a good trade here. And it will, well, head up in that orange. You would have caught a beautiful trade here, right? This would be 26 to 80. It's a good 5. No, it's a good 0.6. No, it's a half a point trade here. That's good enough to protect here. And thereafter, there is another algorithm that started showing here, which I didn't chart, but you'll probably be able to see it, right, with your naked eye here. And waiting for more liquidity to start building here. So you would have caught this as well. Now this yellow algorithm, if you extrapolate it all the way to the previous day here, like that, okay, you would be able to see that it's actually part of that inverse head and shoulder I was talking about. Now let me just show it in a little bit more. Right, remember that yellow I was talking about? Yeah, something like that. Yeah, you were to chart it out. Something like that. Right, this is exactly it. That's why you see the sprout here. So if you were to be able to chart that here, you would have caught that final trade nearing to power hour. Right, this would have been quite beautiful. Right, understanding that there is another stronger bullish control here that's building more liquidity with the pink and in this case the yellow. Right, so that was another one to identify here. But more importantly, understanding this liquidity building is quite important, especially with the blue as well. So you see calls at supports, isn't it? So absolutely beautiful trade, and context and structure, and after which continuation, instead of just hoping to short here just because it's too high, or that you think it's going to go down and you're just hope trading. So you see, there are so much tendencies of bad habits that you will surface in your trading, but learn to trade as structure demands. You cannot go wrong, and even if you go wrong, you minimize your your consequences of being wrong, because you can manage your risks very tightly with such penny perfect algorithms right here. So yes, beautiful trade here, especially near the end. This is a pop quiz, right? Especially when I'm not around. Are you able to identify that yellow algorithm that was actually part of the action from yesterday as well? Right, so a big part was actually identifying this yesterday. So let's talk about Thursday as well, since we are at that.